The market's reaction to the US Labor Department report surprised economists. Although the report was disclosed on Friday, it's still worth discussing. The euro and the pound sterling declined, though quite insignificantly. Meanwhile, the US unemployment rate dropped to 3.6% from 3.8%, whereas economists had expected a decrease to 3.7%. In addition, the number of jobs in the non-farm sector added 431,000, twice exceeding the number needed to support the labor market stability. In other words, the unemployment rate is likely to go on falling. However, it has already hit a rather low level. A small drop in both the euro and the pound sterling really surprises. Notably, the euro opened the new trading week with a bigger decline than the pound sterling. Nevertheless, it's just a minor change. Such a situation could be explained by a noticeable slump in the single currency that began on March 31 amid expectations that Russia would start selling gas in rubles. In other words, the euro had no room to fall. Meanwhile, this slight drop in the euro supported the pound sterling. Nevertheless, the published macroeconomic data will hardly encourage European traders. The fact is that the data from the US is often positive, whereas European statistics are mainly negative. Thus, the US dollar has every chance to go on gaining in value. Let us focus on the trading charts. A slump from the resistance level of 1.1180 allowed the US dollar to recoup some of its losses. As the result, the euro-dollar pair returned to the psychological level of 1.1000, where it got stuck. At the moment, the market remains stagnant, and this may lead to the accumulation process and new price swings. If the price settles below 1.1000, the downtrend is likely to continue. In this case, the pair may slide to 1.0960. The alternative scenario will become possible in a case of a local rebound to 1.1120. The prediction will become true if the price consolidates above 1.1080 on the 4-hour chart. Meanwhile, the pound sterling continues hovering between the levels of 1.3105 and 1.3180, regardless of sellers' attempts to push the price below the lower limit of the range. A long-lasting fluctuation within the channel may result in the accumulation process, and this, in turn, may lead to acceleration. Under the current conditions, traders may still apply the breakout strategy. Thus, buy positions could be opened if the price consolidates above 1.3185 on the 4-hour chart. Traders may go short if the price settles below 1.3100 on the same period. And this is all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us in our next release.